Shares of Airbnb haven't really gone much of anywhere over the past couple of years. Shares are actually down 41% from their high early in 2021. This is actually a much better business than it was back then, much more mature, more users on the platform. And I think this is going to be one of the cheapest stocks as we look back 10, 15 years from now. The way to get asymmetric returns is not just buying high growth stocks. It's buying stocks that can compound growth over the course of a very long period of time and buying them at an attractive price. Right now, the price to earnings multiple for Airbnb, 17.4, enterprise value to sales is about 7, and the price to free cash flow is a little under 19. I think that's a good price for a company that's still going to grow right around double digits this year, and that's kind of a year when consumers are starting to pull back on their travel spending. So let's look at some of the operational momentum and metrics and what we need to watch with Airbnb. My name's Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content, and thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. First of all, let's look at the operations from Airbnb because I think these trends are worth noting. There's been some disappointment in guidance from Airbnb, but if you just look at revenue, which is in this reddish pink color, net income, which is in blue, and free cash flow, which is in orange, the company is doing extremely well. The business continues to grow quarter after quarter. And as much as investors and analysts may have been a little bit disappointed with management's guidance for more like high single-digit revenue growth coming up over the next couple of quarters, it's worth looking at what they expect over the next few years. First, this is the consensus revenue estimate, and this is for all the way going back to the 2022 and 2023 numbers are actual numbers, and then we get to 2024 estimates, and then all the way through 2026, and the light blue segment is basically the range between the low estimate and the high estimate. So even on the low end in 2026, analysts are expecting revenue to be about $12.5 billion. On the high end, $14.3 billion. So pretty significant growth from the $10.5 billion we've seen over the past 12 months. On an earnings basis, they expect earnings to be $5.44 in 2026. What they're basically anticipating is that 2023 was going to be an outlier year, and that's because of a single quarter in September when there was $6.63 in earnings that quarter. But things are going to steadily grow over the next couple of years as the business grows. So we have a stock trading for a reasonably good valuation. You have solid performance on a trailing basis. On a forward-looking basis, analysts are expecting the company to continue to grow at a relatively rapid rate. And there's a ton of optionality in Airbnb stock. This is, I think, the thing that we can't lose sight of. Airbnb is one thing today, but it may be able to grow significantly with a few tailwinds over the next 5 to 10 years. And this is where we're really betting on the leadership of CEO Brian Chesky. We know Airbnb for being the two-sided marketplace that it is today. So somebody puts up a room or an entire house where you can rent it out for a day, a week. They're doing more and more longer stays. That's the traditional Airbnb. But where are they going to grow in the future? One of the ways that they can grow, natural growth aspect, would be more international locations. So that's something that they're obviously going to do. But really where I'm interested in Airbnb's growth, and this is where I think Chesky has a really good vision for the platform, is into more experiences and then into artificial intelligence and being able to be your concierge. We don't know exactly what that's going to look like, but I think it's worth looking at how Airbnb has changed just over the past few years. This is a traditional Airbnb look. You can see that they're moving into more of these experiences, but now you can search all kinds of different places that you might want to stay. A place with an amazing pool, stay at a castle. But I did a search for experiences and just experiences near me. And I said, hey, I want to do something in November. Now, I'm in the Minneapolis area, so these are the things that popped up. Knife throwing, a Minneapolis tour, Nordic spoon carving, a yoga class with goats, hidden Minneapolis bars. These are the kinds of things that weren't on Airbnb at all just a few years ago, or at least weren't searchable in the way that they are today. And so you can see a natural growth for Airbnb to go, okay, you're staying in a certain location for a few days. What sort of activities would you like to do? We can book all of that for you. Now you layer on the vision for artificial intelligence. And I think that's where things get really interesting for Airbnb and where there's a lot of optionality for growth. Remember I said, if Airbnb is going to be a cheap stock, you have to have a good entry point. So the valuation of the stock is important today, but it's also important that you have optionality for those asymmetric returns long-term. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. What would that optionality look like? Well, it would look like things like just being able to talk to Airbnb to change reservations or to update based on what's going on with your itinerary. So let's say you go to Airbnb to book all your travel from location A to location B. It then knows where you're staying. It's going to know if your flight is delayed. It's going to know if there's a snowstorm. You could add in things like reservations at restaurants. They could suggest that and actually plan it for you. They could find out, hey, your tour is running late. So maybe something you're doing in the afternoon. We're going to have to push back that reservation that you have in the evening. This is where Airbnb as a platform, where users are coming to the platform and there are millions and millions of suppliers on the platform, not only providing homes, but also providing experiences. If they expand the number of experiences, the way that Chesky talks about this is having multiple pillars. They don't want to just be a homes company. They want to also be a company where you can do your travel, your experiences, your food reservations. I think those are all things we're going to see Airbnb move into in the future. And things like artificial intelligence are going to make that easier. The other beautiful thing about this business model, and I think we really need to highlight this as investors, is the way that Airbnb's balance sheet works. Now, what I'm showing here is the total cash that is on Airbnb's balance sheet. Now, keep in mind, Airbnb has a market cap today of $82 billion. There is also $21.7 billion worth of cash on the balance sheet. The reddish pink color you see right here, the $11.3 billion in cash, that's Airbnb's cash. That is cash that they could do anything that they want. They could buy back shares. They could acquire other companies. Gives them a lot of flexibility in the business. And after the trauma that they had during the pandemic, wouldn't be surprised if they keep just more cash than they really need on the balance sheet. But the blue cash is the thing that I want you to keep an eye on. That is actually reservations that they have on the platform. So when you sign up for an Airbnb, you say, hey, I want to take a trip next summer. It's going to cost $1,000 to take that trip. You're going to pay that $1,000 today. Airbnb is going to hang on to it. And then Airbnb isn't going to give it to the host or whoever owns the place that you're staying until you actually complete your stay. So for an entire year, Airbnb gets to hold on to that cash. That's cash that sits on the balance sheet. Technically, it is your money, but they get to earn interest on that cash. And that interest income is really piling up. You can see here the $812 million in interest income over the past year. Yes, that interest income level will come down a little bit as short-term interest rates come down. That's what they're investing it in, is things like bank accounts and treasuries. But this is going to still be a huge source of cash flow for Airbnb, even if the core business isn't growing. This cash flow also increases if the business does grow. So you increase revenue 10%, let's say, your cash on hand is going to likely increase about 10% as well, and that interest income is going to increase. So all of these things are tailwinds for Airbnb. I think everything is looking good from a long-term perspective for Airbnb, but this is one of those companies that you kind of have to overlook the short-term volatility that just naturally comes with a business like this. Any sort of travel business is going to have weakness when customers start to pull back. That's what we're starting to see later in 2024. We saw that in their guidance last quarter. But long term, I have a hard time seeing that this business isn't going to be bigger in 5 to 10 years than it is today. There's a lot of optionality to grow the business into other segments, and there's tailwinds behind the core business as well. So a lot to like about Airbnb, like the value, and I like the long-term potential. Let me know what you think about Airbnb stock in the comments section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.